Good morning. Good morning. Welcome everybody to today's $1 million coffee hour. I'm your host, founder, REIG, is Johnny Lina. We're doing a new format today. Instead of being located in Zoom, we're going to go with another streaming platform. So really to kind of one, get broader exposure, but then also give opportunity for you guys to join us in the studio live. We're going to drop the link in the comment. If you want to jump in, come in and ask questions, have a little bit more conversation as we bring our coffee out this morning. It's a lot to talk about. There's a lot that's been happening, across the U.S. economy. When you look at Amazon, I think early last week there was an article that came out that they're planning to double their revenue uh, by 2033. And with that, normally, in order to double their revenue, they would have to add an additional 600,000 jobs. And they're not looking to actually have people replace those new jobs that will come in. They're looking to leverage AI and technology. And lo and behold, less than a week later, we get the notification that they're going to be laying off up to 30,000 corporate staff members there at Amazon. So I think looking across the board, you see Microsoft with layoffs, UPS. There's a lot of corporate companies right now that are uh, embracing technology, AI, robotics, and, and I think one of the things right now we have to we have to remain flexible, number one, because nobody knows or no one has a crystal ball to understand what AI, what the robotics, what industries are going to be impacted. We know some for sure, but not everything. And I think really I was sharing earlier this week that if you're college age, you're leaving high school, graduating, and you're going into uh, the university, trying to choose a major, like this is a scary time. Whereas that everything that we thought knowing going into the economy on the best jobs, the high paying jobs, the ones with a certain skill set that you knew if you got this skill set that it would translate on the other side to a high paying job, a stable career, that's out the door right now. I think right now this is completely disruptive. I think we're back at the beginning stages of when the internet first came out and just the transformation that we had to the economy and just the overall impact. So my words of wisdom right now is to continue to learn, to get up to date on what's happening, the new latest breaking technologies, as you're going through choosing a major, because going into college, one job that you're going into a career that you're looking to obtain in the 4 years could be completely gone. It could be wiped out and not even existing by the time you finish college. And I know that could be scary for people, especially if you're going into debt with trying to get your college degree. My words of wisdom and encouragement is just remain flexible in what you're doing and keep a pulse on the market and understand what's happening, and make sure that you're making the best decision for you and your family. Because at the end of the day, that these job cuts, that the shareholders aren't looking at, oh, I wonder how many families are impacted by these 30,000 jobs that we're cutting back. They're like, hey, we're gonna negatively impact Amazon for cutting these people before the holidays and them losing their jobs. No, the stock price went up. Like, we have to understand that these businesses and corporations are for profit, not to make sure that you have money on your table. Make sure you have food on your table and money in your pocket. And that resides with you. And the thing that, 30, 40 years ago, where we could be with one employer for up 10 years, get a pension, and know we're going to stay with that company for most of our career, those days are long gone. And now we have to diversify our skill sets. We have to be flexible in our approach. We can't put all our eggs in one basket. And so I think we're looking at side hustles, becoming an investor. We're going to be talking about an asset class today with private equity, and just for the right people, what that looks like, with learning a little bit more about private, with getting the exposure there in regards to diversifying your portfolio, and just understanding how this is another tool that you can add to your investor toolbox with everything that you're doing. So a lot going on. The government is still shut down. No end in sight from everything that I've been seeing with the most recent news there as well. And, I think started right now that military members aren't being paid, federal employees, some contractors not being paid, and everybody's just kind of holding out to see what exactly is going to break through and how we're going to come out of this. But right now, both sides aren't talking. They're blaming each other. And at some point, we're going to have some type of leadership step up. Someone's going to have to get out front and say enough is enough and come to the table and negotiate, hopefully, so this doesn't drag on for multiple weeks. And so we'll see how it goes from there. But definitely a time to continue to stay prayed up and to take action, because every time that you have challenges, there will always be opportunities. There are always opportunities out here, but we have to take the time to look across the board and understand where they reside and how we can leverage those opportunities and take advantage of them uh, with everything that we're doing. So today we're talking about understanding private equity and diving into what that actually means and how to build wealth beyond the stock market, and really just making sure that we have a true exposure of what's out there, because a lot of times you don't know the different investments that you can make in regards to real estate, private real estate transactions out there, syndications, as well as private equity is another one that we talked about. A few weeks ago, we talked about Delaware Statutory Trust DSTs, which were really great for 1031 exchanges to move money into. We talked about that one, the power of self-directed 401ks. We discussed that one a couple of weeks ago. So definitely go back in the community and grab those videos and kind of walk through, because all of this is to really give you more exposure to what's out there and what are the possibilities when it comes to diversifying your portfolio outside of just the traditional stocks and bonds. Because one of the things that with all of this that's happening with AI and robotics and technology is there's companies that are driving this. And if you're an investor in these companies, then they're working for you. You're riding the wave. You're an investor. You're going to reap the benefits of any new technology that comes up. That goes into crypto as well too, and the different coins, and just being able to understand how all these assets can serve you and help build your portfolio. Because if Amazon doubles their revenue by 2033, if you're an investor, then that's good news for you. And so that's the thing that we have to understand is how are the different ways that we can become an investor where we have our money working harder than we're actually working, where we're not trading all our time for money in the creation of our income. So with that, understanding private equity, that this is one that I really have my new position after retiring at the Air Force, working in the financial advising side, have really took a deep dive into learning more about this and just the impacts to the bottom line and to client portfolios, and really looking at that. But private equity is pretty simple. It represents ownership of companies that aren't publicly traded on the stock exchange. So, when you think about your Teslas or Nvidia, just any Walmart, Target, any public company that you can go buy on the stock exchange, that these are private businesses that, when you hear the term IPO, or, initial public offering, when a company's coming onto the stock market, they're going to a public offering, that they've been private for all these years. And, and now you're looking at ways that you can go and actually buy into these private businesses. And so the strategy with private equity, that is long-term value creation, whether, compared to short-term market fluctuation, that you're looking to go in maybe 17-year period, that you'll have funds on Wall Street that will raise hundreds of millions of dollars. Some may even be tens of millions of dollars, smaller funds, but they have a business plan, and we're going to kind of walk through what that cycle looks like, or what that framework looks like. But their goal is to buy a business, improve operations, drive growth, and then eventually they're going to sell that business at some multiple, or for a higher price in the future. And then they pay all the investors that gave them the capital on the front end. They pay them back all their money. Hopefully they sell at a price where they make a great return, and then they're off to do it again. And so that's one of the things that we really think about, is like, how can you go and buy a business and grow a business, compared to our normal construct that we think about is just really investing in business on the stock market. But there are funds out here that raise private capital and go and buy businesses and bring in the synergies. And so I've heard the interest of companies, and you can look at private equity. I know here in Northern Virginia that there was a private equity company that was looking to bring in veteran military members in to provide leadership. And this private equity company, they had bought multiple HVAC companies here in the Northern Virginia area, and they were looking for a strong leader to come in and manage all of the Northern Virginia HVAC companies that they had bought, for their portfolio. And so, you have, private equity companies or individuals that may go and buy, fewer homes in a certain area, and they package them all up. They operate them. They bring in efficiency. You may have a mom and pop owner that owned a company that wasn't doing advertising, that just had a small book of business, but they had opportunity to grow, and coming in with adding, ads in, or bringing in a different source of marketing, with bringing in training across the board, that they can increase the revenue of the business and the profitability. And now if they bring in and buy 10 of those businesses, they have economy of scale. You have one manager that leads all of these smaller companies, instead of having one CEO at each one small business there in the same local area. Once you get those economy of scales, you get it all up and running. You have a couple years of success, and then now you can sell that group of businesses to another firm that's looking to buy, or to an individual. And then once you have that exit, you pay all your investors back their money. Sounds simple, but you go through that formation, that process, and it could take some years, anywhere from 7 to 10 years. So it's not it's not a short term type of investment. It is illiquid, where you have the capital formation, where you bring in the multiple investors, you have the capital, that you have the business thesis. Hey, we're going to look to go buy HVAC companies in Northern Virginia. Over 5 years, we're going to buy and acquire these companies. Then the next 5 years, we're going to optimize, and we're going to grow the companies and go through. And so you have that strategic vision of the acquisition, and going through and promising the private companies, or help launch a new venture. We're using that, but as an example of buying like HVAC companies, but it could be completely new tech startups. You may have someone that has uh, a new process and technology with a special chip, and they have a limited use case, but they need money. They need the right experts to build something, a product that they can actually take and deploy globally. But it takes a lot. It takes a lot of upfront capital to do the research, the development, to build out the infrastructure to make that happen. And so that's where the value creation comes in, and having strategic guidance, or professionals, individuals that have that expertise, that know how to allocate the resources, and then just being able to bring in from other portfolio companies that the fund may own already. They can bring expertise in from those other companies to help create that, drive that growth. And then eventually they have that IPO, that initial public offering, strategic sales, where they can sell to another fund, or have the secondary buyouts that come in, that equate and bring in that on that sale. And that's how investors are paid once they have that exit. And so it can be a little bit complicated there as you go through, but essentially you're going to bring in the capital, have a vision. You're going to go and strategically acquire the businesses that you're looking to buy, or maybe the loans that you're looking to give. And then you're going to create that value, execute your business plan, and then you're going to liquidate and sell, and have that profitable exit on the back end. And so I gave an example of buying existing business, but that's not the only type of asset or acquisition that you can have with private equity. You can have venture capital that kind of focuses on early stage startups. So think about like maybe Tesla 15, 20 years ago, at their infancy, before they made even the first car, or SpaceX before they even launched the first rocket, being able to get in on the early stage. Or you think about Nvidia before they got their first contract producing the microchips. So, but with the venture capitalists, that a lot of times we talked about it, that you have these great ideas, but all of them do not materialize. Where with the venture capital, is high risk, but you do, on the flip side, you do potentially have exceptional returns that you can have on those ends, have on that end. Growth equity, you investments in established companies ready to scale operations. So you can have a company that's up and running. We talked about it, like buying multiple HVAC companies, that the company's up and running. You can come in, you can scale the operations. Maybe you're bringing in marketing, or maybe you're bringing in a new strategic leader, and maybe you're in one city, and you have three other cities within 30 minutes, and maybe you can expand into new markets, and you can accelerate new product development growth. And so there's opportunities for growth. And so growth equity, where they bring the capital in to kind of energize these existing businesses. Buyouts, acquire mature cash generating businesses with proven track records and opportunities for operational improvements. That's kind of what we talked about kind of similar to the growth equity, where you have a seasoned business owner that they just come in and buy the business from. that they're doing well. They may not want to partner with the fund. And so they'll just come in and buy their existing business that's up and running today and maybe cut costs. And then also you have private credit that when you think about just non-traditional banks for my real estate investors. So with the private credit, think short-term loans like hard money that a lot of times that essentially is private equity where they pool investors resources together and then they lend it out to real estate investors by way of bridge loans. And so you can see that as well too. And then real assets, so tangible investments in like infrastructure, energy projects, real estate that generate steady income and provide inflation protection. And so all these different forms, you just essentially think about it, private equity, they're pooling resources together, and then their business is to go and buy whatever their strategic knowledge that they have that they're interested in. They'll go out and procure those assets in order to execute their business plan. The same thing is no different than a private equity fund that that's going to buy apartment complexes or self storage. You can have private equity funds that are looking to buy existing oil wells or maybe doing exploratory oil wells that they're looking to invest in. And so the biggest thing is really having the expertise and foresight to drive innovation or to drive the investments in these different areas when you start looking at the private equity side. So who invests in these type of deals? In the past, it was definitely exclusive where you had to be on Wall Street, you had to be ultra high net worth, 50 plus $1 million portfolios. And, the Jobs Act that was really what lowered the barriers and the entry costs and a lot of the rules that were put in place to protect the consumer, where they didn't really expose a lot of the opportunities to accredited investors or just a normal everyday investor, that now the Jobs Act made the entry barrier a lot lower and more exposure. And we're kind of seeing that continue to happen across the board, especially with technology enablement, with fractional ownership platforms. They really have democratized the access to these different opportunities and made it really easy for investors to invest in these deals, where I've seen opportunities where as low as $2,500 as the minimum to get into the potential of these deals. And then mainstream adoption that now is a core component of sophisticated wealth portfolios. We just saw the most recent, the big beautiful bill that came out, that they gave, I think, the SEC 6 months to figure out how 401ks, so qualified retirement plans, can now start participating in private equity. So the big beautiful bill, one of the mandates was to go off to SEC, the federal government, to figure out how pension plans and qualified 401ks can start investing their capital into more private equity opportunities. So that's continued to more and more, and that's just going to flood more money into this industry. And kind of just looking at the landscape that right now, a little bit over $3 trillion in assets under management. So businesses that are owned and operated by private equity funds, which represents about a 12% year-on-year growth, $330 billion capital deployed, total invested in 2025, and the exit activity growth. So the last few years that have after COVID, with the run up in high interest rates, there wasn't a lot of exits that were really happening across the board when you start looking at private equity funds and IPOs that were happening, where businesses were taken public and then investors, of course, reap the benefits of waiting all those years of investing in those companies. And right now is why you see $1 trillion of dry powder reserves. So that's just capital that's been allocated for future business acquisitions and future investment in these funds, but they're just waiting for the right deals. And so that's $1 trillion is just sitting around waiting. And so when we talk about, like, on the real estate side, that there's money just waiting for interest rates to drop and for the market to kind of turn and bottom out, that there's money sitting on the sidelines waiting to come in and swoop in and buy these assets and continue to build growth. And we know right now on the real estate side that we're having a lot of absorption right now with new construction. But for the last 2 years, construction has really fell off a cliff. And we're not seeing it nowhere near the level of construction that we had in 2021, 2022. And so as all of the new inventory is absorbed, that guess what? That's going to force rents to increase, as well as as well as housing with the higher interest rate right now, that is still not affordable for most people to buy a home versus just rent. And so a lot of this dry powder we see is going into asset classes like build to rent, new class A multifamily, and also funds that are buying distressed multifamily as well too. And just presents a unique opportunity for the right investor that's looking to own long term, and can wait out the full cycle to go through from buying the investments, increasing the growth, and then waiting for the exit on the back end. So, why investors really care about private equity? You have a superior return potential. So, the target internal rate of return, 13 to 14%, that kind of outpaces the public markets. But then also, you have portfolio diversification, low correlation with the stock market, with the public market. And we're always looking for that true diversification. Tony Robbins talks about in his book, the Holy Grail of investing, that the thesis that we all should be really building towards is having 7 uncorrelated investments in our portfolio to achieve that true diversification. And so that this is one that you can add in there. Innovation access, so direct exposure to cutting edge technology, disruptive business models, and companies that are continuing to transform. We look at ChatGPT, um, with what they're doing the last couple of years with their startup and what they're doing. And there's a ton of other startups that are bringing artificial intelligence to different industries that are all out there. I had a conversation last week with a firm that was looking to buy AI marketing agencies over the next 5 years. They were raising capital for, and to buy these marketing agencies to sell a product, sell a mastermind, and then they're going to pull it together and exit in 5, 6 years. And so there's just a lot of different innovation that's happening, but you have to understand the knowledge that you need to have and the risks that come with this. And then the legacy building with meaningful ownership in real businesses that create jobs, drive innovation, and generate lasting economic value beyond financial returns. So one of the things too, we're talking about private equity, but the same thing that you can execute this in your own portfolio at a smaller level, at an individual level too. Whereas that you see a business where you may have someone that's looking to retire, that's running a profitable business, but they don't have a succession plan. They don't have a plan to retire and hand the business off because their kids may not want the business. And there's another opportunity here for us as entrepreneurs and those that are looking for opportunities, that we can buy some of these businesses at great terms, where the owner can sell or finance the business, where you take over and you come in and they retain equity in the company. You do the day-to-day operations and they just get a receipt. They receive a portion of the cash flow or whatever you work out. And so those are opportunities that are happening in different industries as well too, where you don't have to have a large private equity umbrella, but you could look at potentially just working with the local business owner, you buying and procuring that business and operating as well too. So there's investments across the board, but you just have to be able to have the vision and the mindset to look for the opportunities that are right there in front of you every day, when it comes to business and the potential that you can have to kind of add this to your portfolio. And so we talked about the benefits, but what are some of the concerns that you need to look at? So illiquidity commitment. So we talked about it could take up to 7 to 10 years, or sometimes maybe longer. So the options for early withdrawal are limited. And a lot of times you're going to have to sell at a discount if you would like to go through and do an early withdrawal. When you start talking about the secondaries and being able to buy positions where the company's established, but maybe it's taking a little bit longer to mature the technology, or the interest rate environment isn't conducive to going public and raising capital and going into the stock market. And so they're just delaying for a couple years to wait to the right exit time. And with that, if you need the capital, then it could be a few more years before you can tap into it. That may be a problem. So you got to understand that whatever you allocate here may be illiquid. Higher entry thresholds. That a lot of times they're going to want bigger checks. That you may not be able to make an investment of 25 or 50,000. You may need to make anywhere from 250,000 to 5 million. And although with technology, new platforms, you can get in with lower entry costs nowadays, but you have to find out and seek those right opportunities. Limited transparency. So with the private companies, they don't report quarterly earnings. They don't have the same disclosure as public firms out there as well either. So like with the quarterly and annual reports, you won't have a lot of that. So a lot of it, there is a higher risk level with it. And so, which in the past is why it was limited to sophisticated, accredited institutional investors, just whereas that limited transparency and they don't want the public to be in a position where they don't have the knowledge on the company and they make a bad investment. And so that's why we always talk about diversification, 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 because you never want all your eggs in one basket, anything. And then the due diligence is essential. You have to do your due diligence, do your research for the information that's out there. You want to understand the strategies, the track records of those that are managing the companies, how the fees are set up with the funds, and then make sure there's a true alignment with your interests overall. And then just talking about diversification, that you want to look at where, even if you're looking at private equity, where you have a good mix of the early stage companies towards the mid stage, and then late stage companies that are focused on exiting, where you kind of spread out that risk. But then looking at the different sectors that we talked about, you have technology, healthcare, real assets like real estate. You have energy that's out there, and infrastructure assets, and then just look at different opportunities where you can maybe geographically spread out your risk as well too, where you may have some opportunities for international exposure or in different regions within the United States that just allow you across the board to achieve the maximum diversification. And then liquidity options, the secondaries market is a way where you can sell your shares at a discount, and being able to understand where the fund is at in the life cycle would kind of help you plan out when you would potentially see a liquidity event, and get that return of capital. And then this here, I think, is the last one. It just kind of show the breakout potentially. Looking at the venture capital piece, the buyouts, the private credit, the real assets, the secondaries, and just for, hey, if you wanted to allocate 10% of towards private equity, how you could even narrow down within private equity with that single umbrella, that you can kind of position it within different levels underneath there, where you can kind of achieve that true diversification, where not all of that, say if you want to allocate a certain amount, 100K, that it didn't all have to go into just one, that you can look at finding the right opportunities where you can get in with some of the lower entry costs with the minimums, and allocate that way, in order to kind of get that true diversification. So with that, that's kind of at a high level. Just really wanted to kind of provide a little insight, education in regards to private equity and what's possible. What's possible out there. It has to be the right investor. You definitely don't want to start off going into private equity as your first investment. That this is a add-on to diversify what you're already building, and then just gives you a tool where you can continue to build wealth, with potential higher returns, and looking at, how that fits in. But definitely want to talk with your financial advisor, your financial professional that you lean on for information. All this is educational, and really just to expose you guys to what's out here, and kind of start the dialogue and conversation on what potential exists out here when it comes to private equity, so you can kind of have it on your radar and looking at those different opportunities. With that, I'll open it up for any questions. I see we have a few people in the room this morning. Good morning. Good morning. How's everyone doing this morning?
Hey, good morning, Johnny and team. LaShawn here.
Good morning,
Good morning.
everybody.
Good morning. Good
Has
morning.
anybody in the audience participated in any private equity deals?
Yeah, I wanted to share. At one point, I did own a couple of shares of Ripple. I sold them, but one thing that I noticed when I sold them, I lost a significant amount of the value. So I guess that's one thing you have to be mindful of, that when you're involved in private equity, is not as the parameters and the potential for loss if you sell early is also there.
Yeah, no, that's definitely true, and I think that's one of the things we're looking at. The illiquidity is a big one that you need to make sure that you understand as you're going in.
Right, it's not as flushed out in terms. the way that you're going to realize the profits as traditional equity, but tremendous upside. I agree with you, Johnny, and I really appreciate the diversity approach in terms of investments. Not putting all our eggs in one basket. Great stuff.
Yeah, no, thanks. I think that's the big one really that of course for me that my I won't say call to fame, but my focus for my investments was really real estate. And as I continued to grow in real estate and got into buying apartment complexes and really looking at other wealthy people and seeing what they're investing in, the opportunities that they have access to, and started looking around. It's like, okay, how do I now look at diversifying more of the portfolio, reducing risk along the way, and different business opportunities to look at buying businesses, to partnering to have a smaller in certain industries to get more exposure and doing those different things that we have to be more mindful and looking across the board
Absolutely.
as we go through our investor journey and as we get closer to, we'll say, retirement age, as we just or as we evolve how we want to live our life and work, that you have to look at your investment strategy and make sure everything is in alignment and that you're not out of phase. And so I think this is just one feather that we can continue to add to our hat, our tool in the toolbox with private equity, that we just get more exposure and understanding, because everything is changing. Like, we don't understand it, but the thing is, our 401ks, our pension plans may start uh, investing in different private equity funds, and we need to be informed of the assets and what we are investing in, participating in.
No, agreed.
Because
Again,
knowledge
I
is
love,
power, even more
I
so
love,
now than ever before with just having knowledge.
absolutely, absolutely. And again, thanks for doing what you do. Again, I love the the approach. Me, again, if you've been listening to my testimony, I'm somebody, I've made a lot of money. I've made a lot of money. And it's all relative, right? What's a lot of money? But putting that money to work for me has been something that I haven't done the best job of for a number of different reasons. Distractions, some education, I guess you would say as well. But if I do half as well as I've done over the last 8 years, the plan is to put that money, those resources, to work for me, so that I can, sit back and enjoy the fruits of my labor for years to come. Right, through a number of different vehicles, real estate. We talked via text, Mr. Lyman. I have this goal of acquiring, 1,313 units over the next 13 years. Something like that does not happen unless you have the right pieces in place, right? I'm not going to go out there and source 1,313 units and manage 1,313 units, right, all by myself, right? Not going to happen,
Right.
right? So, got to come out of my shell, got to start networking, starting to put establish the right relationships. Obviously, yourself and the REI team and what you guys are doing are going to be a big part of that. Faye, I see you over there. I got to, jump on I guess I got to schedule some time with Johnny. Good morning, everybody. I figure I show my face here, and I got to get ready to go to work in a few. Working from the office in Arlington. I'm in the Pentagon on Tuesdays and Thursdays now, and working from the office in Arlington the rest of the week. Which is 5 minutes away, so it kind of worked out for me real well. But again, just looking forward to putting the right team together. REI, what you guys are doing, Mr. Lyman, going to be a big part of that moving forward.
Let's go.
Let's go. Think Johnny may be having some technical difficulties, but
Looks like it. Yeah.
yeah, the diversity in terms of investments is critical. I have a specific strategy, which again I'm looking forward to sharing with the team to gain some feedback concerning some a different way of doing things, right? But I also can appreciate that you don't want to put all your eggs in one basket. Love the knowledge that was shared, reference the oil industry and the energy industry, and how you can take advantage of the tax exemptions and claiming a majority of your investment up front. I think it was 85% of your initial investment can be written off using that strategy.
Yep, that's true. It's huge on the first year. I think Johnny is still connecting. But I guess I mean, to each his own in terms of like putting it all together in the diversification in wherever
Yeah.
you want to put it into.
Yep. Learning. This is knowledge. This is awesome. Knowledge is power. And thank you.
Yep. Most definitely. Most definitely. Yeah. Thank you. I was lagging a little bit on my internet here. Any other comments, questions, real estate, anything? What's going on with you guys this week?
Well, I guess I'll share. If you don't mind, Johnny, and Faye, and the rest of the team. I see Dr. Joel McLeod on, um, and Hannah David, right? So
Yes.
I'm a big I have this conviction in the future in emerging technology, and just like the .com bubble, that was a great opportunity that many people made wealth out of, from. A lot of people they missed that opportunity. We have this opportunity now with emerging technology, artificial intelligence. I saw you posted something, Johnny, about AI, and how it's definitely going to affect finance.
Yep.
I didn't get a chance to watch all of that, but I plan on revisiting in the future. But right, these technologies are converging: AI, blockchain, nanotechnology. I was talking with my brother. He was telling me about quantum computing and the advancements that are taking place in that lane. So when all these things come together, it's going to affect industries in a way that really we really haven't seen in quite some time, right?
Right.
Jobs are going to go away. New opportunities are going to present themselves, and it's up to us to really try to position ourselves so we can take advantage of the changes that are coming. It's kind of like Blockbuster Video. They didn't see the revolution, and they lost out to the Netflixes of the world, right? So being on the cutting edge of that, dare I say, even having an opportunity to shape. If you're a licensed professional, and you have insights into the way that things are traditionally done,
Mm-hmm.
and if you're a life insurance agent, how can we take what traditionally has been the use case and marry that with blockchain, right, to create an even more advantageous way to offer a service or product that may not even existed prior
Mm.
to this, convergence of technologies. So that's kind of where I'm at. Um, you know, and again, we'll get a little more specific when we jump on a call with you. But the traditional ways of leveraging life insurance policies, uh,
Right.
tying that into the advancements in emerging technologies and offering new products and services. I think that's where a lot of people are going to make a lot of wealth.
Uh-huh.
Even
Yep. No,
there's
100%.
if I may just add this one thing, there's a company by the name of Securitize. Johnny, I sent you a link to Ripple Swell, which is a conference that takes place every year. It's hosted by Ripple. And this year it's in New York, November 4th through the 5th. I understand that you have a previous engagement, right? And they have previous years on YouTube, right? I think Ripple
Okay.
2024 is available to view via YouTube. But at this conference, they're talking about these types of things,
Mm.
right? And they have
Disruption.
all of the key individuals that you would imagine should be there. The heads of finance for their various companies, right? We're talking, J.P. Morgan, right? All anybody who's involved in finance. There's a company by the name of Securitize. Please, if you have an opportunity, everybody, if you're in real estate, look them up. Securitize. I came across them. I was taking a Coursera course via, I guess, on fintech and AI and real estate, actually.
Okay.
Free course, nothing too special. And the material was probably about 2 or 3 years removed from where we currently are at in the space. But
Hmm.
I came across them via that course, and they are involved in a number of different things. One of the things that they're involved in is the tokenization of real world assets,
Wow.
Okay.
which the real estate market is going to be a huge piece of that real world asset tokenization. Not the only, I guess, slice of the pie, but there's going to be, I guess, a way to take a real estate deal and assign fractions of ownership to that real estate, so that now 100% ownership may be represented by 100 NFTs, and you can even go further. So that the speed at which value is going to be able to be moved is going to exponentially increase.
Right. Right.
Looks like
Yeah, it's coming. It's definitely coming. What are you
looks
going to
like
say,
they're
Faye?
addressing the liquidity issue with secure
Securitize.
what's that security, yeah.
Yep, that's one of the big things with real estate is the lack of liquidity, but having those fractional shares that you can go and sell on the platform and have a little bit more liquid market. It's going to be extremely interesting, but it's going to be great for those that own assets. That's what we have to foot stomp. We have to start buying and owning assets. Like, don't get caught up in the interest rates. And there's deals out here. I talked to a young man that he sent a flyer about interested in buying my one of my apartment complexes. And so I reached out to him in his letter. He talked about being an Army vet. And so I'm like, hey, let me build my network, talk with him. He's in my backyard. And he was sharing, talked to a gentleman in his 80s, had did a 1031 exchange some years ago, bought the property, 50% occupancy now, mismanaging it, ready to be done with it. He wants to sell at a higher price, but you can't get a loan with it because that 50% occupancy and it's deferred maintenance. And so he financed it to him 5 years, 100% finance, 3% interest rate. And he's taking over the property where he can run it, build and increase the occupancy and then refinance him out. And so it's like you just got to get out here and have the conversations. You literally just have to get the conversations going. And who knows where one deal, one apartment complex can literally change your life. And so that's the deal, that you just got to get going and make it happen, because at the end of the day, we can't take action. I wish I could take action for everybody, but you got to be able to step in. It's going to be uncomfortable at times. You're not going to see the end at sight from where you are right now, but you got to have that faith. You got to get going. You got to do the work. You got to take action to make it happen for you. And yeah, it encouraged me. I'm like, you know what? I need to be doing more on the marketing side, to kind of get on the acquisition, even though with the financial advising is great. But still, I need to build up, do more, bring in more assets now as rates are starting to go down. More baby boomers are looking to have an exit. They don't have family members that want to take it over, and they're looking for opportunities just to bring in the cash flow to kind of improve their quality of life. And that's where we come in. That's how we add value. So super excited about all the opportunities that's out there. You guys pray for me taking my Series 22 exam finally today. I was delayed about a month, waiting for our broker dealer to get everything, all paperwork and all approvals and all that stuff. So for them to schedule me for that, since I had to have a sponsor for this last one. So take this test, and we're off to the races with helping accredited investors get into a lot of these different oil and gas deals, a lot of the different private equity, private credit funds, as well as some of the DSTs as well too. So super excited about the opportunities on the financial advising side of things, completely separate from REI Genius, and hanging out with you guys and helping people get the skill sets and the tactics on how to build up wealth in their portfolio. So I'm extremely excited about the future and the opportunity, and kind of getting all these things going. And
Separate but related.
Yeah, I know, right?
Yeah, I do have a question for you, Johnny. How hard have you found it, or how easy is it for you to pivot from one series exam to the next? Is it one thing where you're running and let me keep this momentum going?
Yeah, man, it's been crazy because, like, so this is the fourth exam that I've had to take and pass. And this was the first one that I started off because I came in and said, hey, I want to sell direct participation programs way back in June. And then once I came on board, they're like, oh, you got to get your life and health insurance first. Oh, no, you got to get your SIE done first. Like, okay, boom. We're like, oh, well, all right, well, I get the Series 22. Like, well, no, you got to get your paperwork and get sponsored. Then they'll actually register you for that test. I was like, okay, well, what else I need? Yeah, you're gonna need a 65 too. I'm like, well, I did some research. I'm like, well, I can technically get the 63, and that allowed me to sell in the state. And so I went and got the 63 done, and now finally waiting for the 22. But there's a lot of overlap. I'll say the foundational SIE is probably, I would say, from studying, a lot of that's probably a third of everything that you need for the Series 22. And this one is only 50 questions. So
Gotcha.
it's not as cumbersome as something like the 65, where you got like I think it's like some of those like 130, 140 questions on
Got
the
it.
test.
Got it.
But
I
it all
appreciate those
adds up.
insights.
Has its own focus area that you have to dig into and do it. But at the end of the day, you just got to get her done and study and kind of find your groove, because it's different. It's different test organizations out there that'll help you prepare, and going through the different questions and test banks and things like that can get you set up for success.
Thank you, sir, and congratulations.
Yep. Yeah, thank you. We're running, and with that, any parting discussions? Good to see. I see Dr. Joel out there, Hannah. I saw Rowena dialed in. Good to see you all. See Jay as well too.
Yeah.
And of course, you, LaShawn, thanks for all the input, brother, and everything you're doing. And yeah, with that,
Yeah, let's
I
let's
will.
go ahead and schedule, for for I think November or December, one of our Wednesdays to do that. Um, show.
It's so interesting. Definitely, Faye. I'm working around the soldiers, right, and they are having to worry about not getting paid, and um,
Right.
and my supervisor, he's a major. I'm not going to put his name out there, right? But
Yeah, no, don't do that. Don't do that.
about 15 years in service, so he's like, he may be watching now because I sent the link. But the concern is right. How do we pivot from service to a space where we're self-sufficient, independent. So I passed along, your point of contact, Mr. Lyman, and he's more than likely going to reach out. Who doesn't want to have these conversations?
Yeah,
And
no, most definitely, and I think you have to what I've learned, transition out the military is tough for a lot of people if you don't have clarity on like what you want that
mm,
next step to be, on your skill set, how it translates to the civilian world. I started transitioning years ago and kind of dabbling, taking courses, joining mastermind groups, learning about marketing, learning about how to run a business outside of just real estate, but just the other nuances of business ownership and other industry. I embrace the online technology side of it with being able to position myself for that, and understanding like social media and those type of things. So it can be daunting to kind of try to get all that done in 6 months, even try to get all that done in a year to transition out of service, and especially now coming into this job market, we have a lot of government employees. I think we're going to have more people get riffed and let go in the government before the government opens back up. But you start looking at like the job market right now, everybody's embracing AI. Everybody, they're reducing staff. Like this is a horrible job market to be coming into, especially if you're coming out of college. And like being able to understand how to build your brand, distinguish yourself, to separate yourself from everyone else on the value that you have is critical in today's
Well,
market. Because I think you're just looking at it. UPS announced they're doing a reorg. They're letting go 48,000 people with
right,
UPS. 48,000. Amazon just said up to 30,000 employees yesterday. Intel, 24,000 employees. Nestle, 16,000 employees. And like the list goes on and on. It's going to continue to get worse and worse as these companies are looking. They're beholden to their stakeholders, not to their employees. Like it's all about the bottom line. And the thing is, shame on us that we know this, but we don't govern our lives accordingly and make decisions accordingly based off this information that we know that we're just a number. They're beholden to the shareholders. We should be investing in these companies
mm,
because they're going to make all their shareholders more wealthier. And the thing is, and understand if you're an employee, that you could potentially be at risk. You could be replaced by AI. And at the end of the day, they care, but they don't really care that much. They're still going to let you go. They may give you a severance package. But the thing is, you have to understand how are you going to show up in this economy in order to make sure that you're still being able to provide for your family and do those things. So I think this is super
yes,
important. This era that we're in right now.
yep. I would piggyback on that. It's no longer a question of who is using AI or why we're using AI. It's part of it, like how it happened with Facebook years ago. Like, why are you not on Facebook? Because I don't want to. But right
Right.
now, everyone's on Facebook, right? So that's why we actually have launched. Our agents have launched brand to business because with everything that's been happening, the uncertainties and all of that, the only security that we have is to let other people know our story and how you can turn that story into a brand. It's no longer the job market is crazy. you know
Yeah.
what we're selling now is you cannot sell anymore, right? So we are change the landscape has changed. There's another economy that's booming, and this is more about branding now. And so how it was done before, like it's going to take 6 months, a year, or even 5 years to grow your audience or whatnot. But what we have with brand to business is that we're going to help you highlight what you already are. So the journey of you that you had in the past, we're going to help you tell that story so that you can stand out in the crowd. So it's no longer just, hey, I'm going to find the deals, I'm going to find the investors, I'm going to find another job or whatever. But we're going to help you tell your story in the world so that you can bring on the business to you instead of you going after it with the
no,
power of
that
AI and
that
everything.
sounds great, and I'm looking forward to taking advantage of that service. You said the name of the marketing, I guess, service is brand to business.
Yep.
Got to B to
Yep.
B. We know B to B, business to business. This,
Yes.
this is the other B to B.
Yeah.
That's the new
Yep. Yep. Brand and business.
yep, trademark. So I'll will be for those that are watching on YouTube and Facebook, and those that are with us in here, we will drop the link so you can schedule your personal brand strategy session with myself or Johnny or with our team.
Yep.
So you can see what we're doing behind the scenes and what now we're gonna teach you and things like that. And yeah, let's get through with this.
Let's go. I just want to caveat, Faye, if I may, off a few of the things that Johnny was saying previously, and then you were also speaking to uh, regarding the market, right? I'm somebody. I'm 48 years old now. Um, Invested a lot in education, right? My story: two master's degrees, right? Two undergrads, a CISSP. It's allowed me to do very well in terms of job security and cyber. I found myself for the first time in life unemployed for the last 7 to 8 months. And again, I could have blitzed and potentially, but the jobs have always, come so easy, that, I had faith that eventually I'll land, and I did, right? But again, 7 to 8 months when you're used to, earning 6 figures plus, and that goes away.
Mhm.
It's like, wow, I wasn't anticipating. I'm somebody, again, I've held multiple jobs, and now it's hard to, you know, land one job. So
Yeah.
something definitely shifted. I don't know if we can attribute it to any one factor, but collectively, it's different. It's different now, and AI absolutely is should be a concern for everybody, right? Get ahead of the 8 ball, or you'll be behind it. Data also, right? The way that data is used. They say data now is the new currency,
Yeah.
right? So data analytics combined with AI, right? Combined with all these other emerging technologies, um, you know, if you have the skill set, which is a very high level skill to perform data analytics, the data scientists, the data analysts, the data engineers, right?
Right.
I just signed up for a program. It's called Kickstart Interview. Supposedly, I've gone through the onboarding now. It's roughly $7,900, um, but they teach you, right, all about AI. There's a new concept within AI that I was, I guess, educated on. It's referred to as agentic AI.
Oh yeah. Agentic AI. Yeah.
Okay, so it's no longer us just prompting, right? It's now the agents, they have the bots, they have the ability to
Yeah.
take
They're
actions on
autonomous.
their own,
Yeah.
autonomous,
Yep.
right?
Yep.
So
Yep.
it's like, wow.
People do not realize what is happening. Like being able to have more time and not focused on the military and like consuming information and just studying. Like it's a lot. It's changing at blazing speed with what the AI is able to do and what the production that it can do. Like Amazon's just not cutting 30,000 people just because they're keeping the same level of operation. They're still an increase in profit. Like they're not just cutting and scaling back. They're going to the next level because they can do their same job without 30,000 people. They can do the same job. That's what people aren't realizing. In every business, there are synergies that can happen in
Mm.
because of AI. And so the thing is, like, you got to be prepared now, like before it's too late. It may not. It may be too late now, but you got to get started at some point. But yeah, it's a lot of change that's happening.
Absolutely, absolutely. And again, the mindset and the train of thought, what you're doing with REI, Genius, and Faye, and team, and all the insights, even Dr. McLeod. I'm looking forward to continuing to have these conversations. We're ramping up in the
Yep.
GYW 1313, I guess, family office, right? Making those
Let's
connections.
go. Let's go. Well, everybody have a blessed week. Next week we're gonna have a guest. Um, One of my associates that is really great in the bookkeeping space and helping clients build out their budgets and the planning side of it. Like if you're trying to get your money right, make sure you are in the room next Wednesday. We're gonna have a great conversation about budgeting, the apps and tools out here that can help you in that space and help prepare your finances to be able to start making investments and diversifying your portfolio and building those things out. But this is all about forming the right foundation where you can build a strong house with multiple layers, multiple floors, and multiple stories to kind of set you up for that future legacy with your next generation. So make sure you're in the room. We're gonna have the great conversation next week with her, and looking forward to continue to keep moving forward.
Yeah. And if you guys are exploring private equities or other ways, proven tax strategies, go ahead and book a call with Johnny. I put it in the comments too. And for those,
Yeah. Jump on the call. Yeah, and drop your questions in the comments. We'd love to have some of those conversations and see how we can help you become a better steward of your resources. And whether you're looking at repositioning yourself for a next career opportunity or whatever that may look like, let's have a conversation, see
tax
how we can
season is
add value
coming
to
up,
you.
so better
Uh,
have those tax strategies, in line before it's too
Yes.
late.
Yeah.
And those who need help with the brand to business, you guys can schedule a call with us. It's definitely for free. And yeah,
All
let's go.
right.
See you all
Let's
guys
go.
next week.
Have a good one.
all right.
Bye, everyone.